Inflation rate has risen to nearly 100%, and this is the highest in a decade. Prices have been rising in shops, making daily life difficult for Zimbabweans. According to Zimbabwe's stats agency, the country's annual inflation rate rose to 97.8% in May, and that's up from 75% just the previous month. This is the highest inflation figure, as I was saying, in more than 10 years. Eddie Cross is a Zimbabwean economist, a former MP, and he joins us now on the line to give us an indication of what's going on in Zimbabwe. Eddie, thanks very much indeed for joining us. There you go. Eddie, thanks so much for joining us. All right, so we've had this conversation before, Zimbabwe's inflation, and I think the last time we spoke, it was around 50%. People say it could have been much higher, but now official stats are saying nearly 100%. What's going on?
Yeah, it's very difficult for everybody to understand what's been happening. But we came into this current fiscal year with a huge stockpile of electronic money in our bank accounts, and we've had to devalue that using inflation as the means. And I think what's happened is that the exchange rate has continued to depreciate, even though the economic fundamentals no longer support that. From an academic point of view, from a theoretical point of view, inflation should in fact be dipping off now, and by the end of this year it should be back down to really nominal levels. But that's not happening. And the main reason is not to do with the economic fundamentals. We're not doing anything wrong. It's because speculators are driving the exchange rate down. And I think this has to be brought to an end as quickly as possible by modifying the way in which our exchange rate market works. That is something that's being put in hand right now, but I see no sign of any kind of action by the state as yet. And that is very worrying.
How do speculators influence the exchange rate?
Well, what happens is you've got here several markets for foreign exchange. We have an interbank market which was created by the Minister of Finance and the Reserve Bank back in February, but it's not working properly. We have a market in the banks themselves where they have clients who have surplus foreign exchange, seek people who want to buy foreign exchange, and they fix a rate acceptable to the two parties, and the bank facilitates the transaction. Then you have a third market, which is the informal sector, where very large volumes of foreign exchange are being transacted. We have a 5 million person diaspora, 3 to 4 million in South Africa. And they remit back to Zimbabwe very large quantities of foreign exchange. In fact, I think they're the biggest source of foreign exchange. And these guys basically outbid each other on trying to raise the rate because it's in their interest to get the rate as high as possible. Now, the only way to stop that is to make the interbank rate the principal focus of these transactions. And this we can do. We can do it relatively quickly. But the government's got to understand that, and the Reserve Bank has to agree to liberalization, which at the moment they're not doing.
So what is the fear that government has, if they have one, that's slowing them down in doing these necessary interventions?
It's a thing called vested interests. There are people inside the administration and in the Ministry of Finance and the Reserve Bank which have vested interests in this whole system. And in the bad old days before 2008, when effectively our currency collapsed completely, we had a phrase, we are burning currency. Well, we're going back to that era, and it has to be stopped. Previously, though, the principal problem was that we did not have our economic fundamentals, the macroeconomic fundamentals, under control. Now we do. So this should not be happening. And I hope that the government will realize that they've got to take action on this. And if they do, I see a very rapid return to relatively low levels of inflation and, in fact, a significant across-the-board price reduction, which would really take the steam out of the present situation. If they don't, I really fear for the stability of the state.
When you say stability of the state, what are we talking about? Are we
People on the streets.
Really? So is that bad? I suppose 100% inflation rate, that's basically saying that your salary is worth nothing at the end of each month.
That is the case. That is the case. Our people can't afford to pay for the bus fare to get themselves to work. It's crazy. We've raised salaries by 15 to 30%, but that's a drop in the ocean. When you're looking at the price of bread, which has gone from 90 cents a loaf to now $3.50 or $4. Fuel, the same. Fuel's gone from $1.35 to $3.50, $3.80, and is rising. And so prices have actually trebled in the marketplace, and there's been no adjustment to living standards, to incomes as a consequence. So people are really desperate, and if this carries on, I can see mayhem.
All right.
And this would not be good for us as a country. We need stability and as well as everything else.
So one of the other issues has always been confidence in the banking system, confidence in the currency that you have in your hand, in your bank. And we saw people hoarding cash and not banking it. Is that a thing of the past now? Do people have faith in this RTGS?
Well, RTGS dollar is the principal means of exchange. I mean, when you use your card in the marketplace, it's RTGS dollars that you're paying. And so that's the bulk, that's the main means of exchange. So it's not a question of confidence, it's a question of what do you use when you go into the market to actually buy a cup of coffee or pay for something in the supermarket. But the problem is that people, because the RTGS is not a safe haven for wealth creation or for the retention of value, so people are trying to buy US dollars, to hold US dollars, because they feel that's the only way they can protect the value of their cash in hand or the value of their incomes. And that's, of course, just fueling the fire. So this is a self-induced progressive deterioration which people are benefiting from, profiting from, but which is impacting on the general population in a very serious way. It has to be brought to a halt by effective intervention by the authorities. And that's absent at the moment. We don't see that.
And what is this doing to an already struggling economy?
Well, for the wider economy, you just don't know how to fix your prices. You know, people, how do you price anything when the value of your currency is depreciating on a daily basis? And that is a problem across the board. And of course, for businessmen, it's a nightmare. But you've got to add to that now the heavy load shedding that's currently taking place, anything up to 18 hours a day, where without electricity. Life here has become simply impossible for the majority of people. And we've really got to get this under control, or else we as a state, I think, will really face the real possibility of disintegration.
So 18 hours of load shedding. Can you remember a time it was this bad? It seems to be getting from bad to worse, Eddie.
Yeah, absolutely. I think it is going from bad to worse. And, you know, for most people, they don't see any light at the end of the tunnel. That's the problem.
All right, Eddie, we're going to have to leave it there. We'll keep in touch and get a sense of things moving forward there. But thanks for your update today.